All right. Good morning, everyone. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is Tuesday, September 3rd, 2024. A little confusing, obviously, since yesterday the markets were closed for Labor Day. Hope everyone enjoyed their long weekend. It is back to the markets and back to work here. Glad to have you with me today. We talked about the recap of the week and previewed the week last night. So, again, if you want a little more detail on what we're looking for this upcoming week and talked about last week and the month that just finished, month of August is over, make sure to check out our YouTube channel and take a look at the weekly recap video that was posted yesterday. Let's go ahead and begin. Dow futures are down 233 points. We talked about how important that dollar was on that 200-week moving average and that the next 2 months are seasonally weak. This is expected. It's going to be choppy. It's going to be ugly for a minute. But that doesn't mean we can't make money. But again, just understand that as long as that dollar in the bottom right-hand corner, dollar DXY, as long as that is up, it needs to break below 100.29. If that can break, that's a 200-week moving average. That's when we're going to be out of in the clear in terms of stock market. But as of right now, you can see weakness out there because of that thing right there. Now, it may not be up as much, but it is adding pressure. NASDAQ is down 0.78%, down 154 points. S&P down 0.59%, down 33 points. The Russell down 1%. But holding the 200 moving average on the 1 hour in IWM, keep an eye on that possible support on IWM. I have IWM calls, but again, I still believe in small caps more than anything else in this market, at least for now. Crude oil down 2.4%. We talked about crude oil. The seasonality of driving is over. Summer's driving season, kind of almost over. Gasoline down 3%. How about that? Lower gas prices causes seasonality. And it doesn't hurt that it's an election year, obviously. Gold futures are down 0.09%, pretty much flat, 25.25. I talked about that last night in regards to the dollar, part of our watch list. Silver futures are down 1.5%. Copper's down 2.68%. So pretty much everything is red because of this guy right here. Again, dollar denominated assets. Granted, we are pulling back a little bit, but still, it's going to add some pressure. The VIX is up 6.69% at 1659. 10-year treasury yields pulling back. So at least bonds are getting bought. 3.875% on a 10-year note. 145.78, 111 pips for the dollar yen. The yen is gaining some strength versus the dollar. 53 pips to the downside for Aussie dollar. Bitcoin is green, even though the dollar is up. That's good. 59,500. It was ugly this weekend, but a nice bounce. 25.25 for Ethereum. So that's where we are. All right, let's go ahead and bring up S&P 500 futures and give us a little bit of context. Yeah, not exactly bearish, guys. I mean, even if we pulled back with September and October seasonality, I mean, 55.44 is just the 50-day. We just broke above that on the 15th, not even a little more than 2 weeks ago. So again, if we just get back there, that's not the worst case in the world. That's not the worst thing in the world, but we are hitting some sort of resistance here, or we're just going to break out, one of the two. Again, that's going to be based on this guy right here. Right there. We got to get below this red line. That is your 200-week moving average. You can see how often we bounced off it. Until we break below that, it just seems that we may have topped in terms of the stock market for now. For now. I still think that we have more upside by the end of the year, but we got some things to kind of move off from. This week being the jobs report on Friday, private payrolls on Wednesday, JOLTS job number tomorrow. I mean, there's still news to come out, and we just have to wait and see what goes on. But a lot of this stuff, again, we talked about yesterday anyway. So there's two names on the bear side that I was looking at. Google, talked about that in terms of the watch list. We're waiting for 161.57 to break. You could see this channel here. Breakdown, we're just going to target 157.59. And Microsoft. Microsoft below 400. It is down slightly this morning, but below 400, I'm looking at the 385 puts. Again, we're just looking at this main channel here, bouncing back and forth. We are bouncing off the 200-day moving average, but we want to see if we can at least clear 426 before we go long at all. Okay, let's go ahead and answer some questions now. Good morning, Carlos. I missed IWM last week. How about today, the 222s or the 220s, depending on the volume, obviously, but 220s would be a good setup here. Again, as long as we hold the 100 MA on the 1 hour, take a look at this. Just give me a take a look here. You can see we have not broken below the 200 MA since the 15th of August. The 15th of August. Sounds familiar, right? We just talked about the 15th. Yeah, the 50-day. That's the last time we were below the 50-day moving average. So major level of support for IWM, major level of support for S&P. But for IWM, we still expect more to come. I still like the 222 calls. That's pretty much the recent highs that we had from the 26th, just a couple of days ago. So we're just looking for a retest there. And good morning. Good morning. Yeah, day after the holiday, I didn't expect a ton of questions. That's why the recap was a little more in depth this week. So I think everyone's kind of getting out of the 3-day weekend vibes of going to the beach or hanging out. Totally get it. I totally get it. But we are getting some movement, and we're just gonna have to see if we hold up here. The dollar needs to pull back. We cannot be above 102. IWM is holding some support here. Nasdaq level of support or pivot is 19,500 currently. And in terms of S&P 500, we actually cracked the highs. I think it was like the last 20-day highs just last night, and then we pulled back. So I don't know if it's just going to be chopped today because we do have a lot of news coming. Again, just be patient. Take it step by step. Have the expectation that it might get a little ugly for the next 2 months in terms of pullbacks and chopping around. Have that at least in your mind. But November is always a great month for the stock market seasonally. So November, December, that's what we're gunning for. But September, October, again, we're just going to take advantage. We're going to take a look and see the big picture. We're going to be expecting some weird movement, some chop. And when you have a battle plan like that, I think things are just a little easier to trade and to go by the game plan. You just don't want to fire off darts on the board. That's the last thing I want to do. I want to do everything with precision. We want to make sure that we have exactly what we're looking for, exactly based on what we're looking for, that lines up with the analysis, technical, seasonality, and the market itself. Low volume this week. I don't think it's low volume week. We just got out of Labor Day. Granted, it is a short week, but the jobs report number is probably the most important number that we're going to have this month, other than the Fed cuts. But the jobs number is going to be the important one. So Friday is going to be a big day. Just remember that. I just got back from Maui. Awesome. Very cool. Very difficult to trade when market opens at 3:30. Yeah, you're talking about major time difference. I remember a couple years ago when I went to Madrid and I was checking in. We had GroupMe chat back then, not Discord, and the time difference is crazy in terms of trading. So I'm sure that people just get used to it. Your body gets used to it. Your internal clock. Um, that's why futures are great. 24 hours, can't beat that. A lot of accessibility there. But the regular New York Stock Exchange, 9:30 to 4 Eastern Standard Time. I mean, that's basically post office hours. So, not the easiest for everybody. And I understand. And I've been doing it for 10 years. And it's kind of like in my mind, I say I have a postal worker hours in that sense. But that's why I like futures. Futures, again, is 24 hours or 23 and a half hours a day, 5 days a week. You get the full access. And again, you have control. And that's really it. You're not really waiting on, oh, I got to wait for 9:30 to open, look pre-market. You're ready to go. Yeah, Tesla is up today on some China news. That was part of our watches as well. I'm still looking for 220.86. Give me $5 more. That gets me above the 50-day, and then we could target 236. Doesn't have to be 236 exactly. Could be the 230s, for example, or the 235s. That's completely fine. I don't think there's a strike price that's 236 anyways on Tesla. And Nvidia pulling back. Yeah, Broadcom reports this week. Um, Nvidia we traded last week, but we're going to keep an eye on that 115 level. If that does pull back, we're going to be ready for some puts. Again, puts are more than likely going to happen, guys. October and September, especially September, is very, very choppy and ugly and weak. So prepare. That's all I want to do. Blackstone. I want to say, is that BX? Yeah, BX. Yeah, financials are doing great. About to break out. JPM, Goldman Sachs, all on fire. Citibank chopped me. Bank of America has chopped me this year, but Blackstone is moving higher. I don't know if the I think I'm thinking BlackRock. Sorry, I think Blackstone. Is this the military company, private contractor? I might be wrong. I always get them confused, but it looks like 149 is coming on BX anyways. So $7 more. The only issue is could be a double top unless it's a breakout. I don't know. Very binary. 1, 2. So we might be getting set up for a double top or a breakout. Not exactly the best analysis right there, but that's what we got to wait for. All right, so that's where we are this morning. Again, day after holiday. We know the drill. Let's take it step by step. Let's see what we get this morning. And if nothing is out there today, guys, we don't have to press. We don't have to press. We have a lot of stuff coming. Let me go ahead and take a look at what is coming today. Tuesday, we have manufacturing PMI. That's at 10 a.m. That's a survey. And the manufacturing ISM prices. And final manufacturing PMI. So we get that today. Tomorrow is where we get the JOLTS job opening at 10 a.m. Then Thursday, we have the private payroll change. Then we have Challenger job cuts year over year. And then ISM services PMI. So today we have manufacturing, Thursday we have services. And then Friday is the non-farm payroll report. Okay, so we do have some stuff on the board. And that's why we're going to have to let all this news filter out. Luckily, fingers crossed, finally, we're not going to have any Fed speakers coming up very soon. There's going to be in a blackout period until they have the Fed hikes or Fed cuts. Excuse me, Fed hikes. Ooh, that'd be horrible. But at least that's something to hang our hat on. I just don't like the fact that the Fed keeps repeating the same thing over and over, and then the algorithms just react to any little thing they say. That's not a market. It's a casino at that point. Let's see, CrowdStrike reported earnings. We know the issue with CrowdStrike with that big outage. Still got that gap fill at 290. If we can get above 300, yes, we can play a possible upside long to 335. But that's going to be waiting for a minute, especially in this seasonal period. Unless there's some kind of news that I'm not going to expect. Don't expect much there, especially with tech. You know, we need this guy to keep falling. And now we're pulling back a little bit on the dollar, thankfully. So we will see what we get. IWM still holding up to 200. We'll leave it there, guys. Have a great rest of your morning. I'll catch you guys later today for the podcast. Latest podcast episode is a simulcast with the YouTube. So if you don't watch the YouTube, you can listen to the podcast and more great content to come. Have a great rest of your morning, guys. Cheers all.